Welcome to the Remarkable Retail Podcast, our Season 11 debut episode. I'm Michael LeBlanc.
And I'm Steve Dennis.
On this episode, we are debuting new for the listeners, because we're always working to keep the pod fresh and interesting. We have a guest co-host that is joining us to lend their particular perspectives and expertise to the show. And our very first guest co-host is no stranger to the podcast, and most likely no stranger to the listeners in the retail industry. Ethan Chernofsky, the freshly minted CMO of Placer.ai. Welcome, Ethan. Where are we finding you today?
Guys, thanks so much for having me. It's great to be here. This is something that I feel like I need like some way to commemorate being the first guest host. I'm very excited.
It's a big designation. I mean, we have been giving out special jackets for repeat guests. So maybe as our first ever. Now, how is it going for you? How's your summer been? Just before we dive in, you've been having a good summer. Are you traveling and a little vacation? Talk a little bit about you and what you've been up to.
Yeah. So you know what's interesting? All right. So I am the CMO of Placer. That's very exciting. Leave that aside. I actually had a crazy retail experience this summer that we did not talk about this, but we were in Disney. We took the kids to Disney and Universal. We went to Disney Springs. Disney Springs has a 3-story Coca-Cola store.
Yeah.
So all the merchandise you'd expect, polar bears, sweatpants, all the cool stuff, great. The top floor has like a restaurant bar feel, and they give you a Coke products from around the world taster menu. And it was $17 for 14 cups, probably cost Coke 50 cents. Packed roof, everyone's doing it.
Like a flight of Coke?
It was like sugar plum tea from China and like strawberry Fanta from Zimbabwe. It was so much fun. We had the best time. Everyone's having a great time. And I sat there, I'm like, we need to widen who belongs in physical retail, because that was one of the coolest experiences, and it was from Coca-Cola.
Yeah.
It's just a fantastic example, and I'm a big fan of Mexican Coke, by the way, we get up here in Canada. I just like the flavor a little better. Now, we should, for the listeners who may not know of Placer, again, I can't imagine many, but just tell us who Placer is, because it gives you a bit of context for the things that we'll be asking you and the things you talk about.
Yeah, absolutely. So Placer is a location analytics company. What that means, people vote with their feet. We show you how they vote in the United States. We have over 5,000 customers in the U.S., major retailers, commercial real estate companies, CPG brands, and so across the whole spectrum, just trying to understand how do people move and what do those movements indicate about the wider retail landscape.
All right, fantastic. Steve, when we were noodling around this idea during the summer, we came up with a list of folks we'd hope would consider joining us. Ethan certainly at the top of that list.
No, and so I kid.
A blue flame thinker who's always ready for an interesting challenge, right?
Well, it's been fun having Ethan on before, and we've spent a lot of time together at conferences and whatnot. So, and I love the data they have. So, I think we'll try to bring forward a little bit of that in our conversation as we move ahead.
Right on. Now, this episode is also Sans guest. We're opening the season with a bit of a catch-up in this episode on the big news from the last several weeks with an eye to emerging trends. Then we'll have a segment called This One Goes to 11. We might have to put an explainer in the episode out about what that even means, because Ethan tells us he has no idea what we're talking about when we say that.
Kids today, what are we going to do?
But they're big, outsized issues that we wanted to call out. And then finally, a peek around the corner as to what we'll all be watching in the weeks and months ahead in such a dynamic, disruptive time. All right, let's jump right in and start where we must, which is, in terms of the world's most important or the most important stories to retail lately. And let's talk about tariffs. I mean, the trade turbulence. Steve, you and I have been talking about it probably every episode in one small way or larger way.
Getting a little bit tired of it, but it is important.
Well, I mean, there's fresh news, though. Like, it's fresh baked news all the time. So, Steve, I'm going to start with you. Catch up on what you think are the most important developments over the summer or the past 4 or 5 weeks, and talk about trade turbulence from the retailer's perspective. And let's dive in.
Well, I think if we look at like the last, month or so, at least from a stock market perspective, and I think from some analyst perspectives, there was kind of to me, an idea that tariffs are kind of settled in, like they're not going to be that big a deal. And I fundamentally think that's wrong, because we really do have kind of the pig and the python here. And there's lots of evidence, and I can't possibly go through all of it here, but if you look at which tariffs have actually hit and would be reflected in cost of goods sold, we're not even probably half of the way there. But the other thing, not to get into the weeds too much about it, but for the most part, and I'll talk very quickly about a few exceptions, but for the most part, as we look at earnings, retailers have been selling stuff that they bought at the pre-tariff cost. Now, that's not true in fresh grocery and things like that, but when it comes to apparel and accessories and furniture, they're working through things that they own at the lower price. But it's starting to feather through. And if you look at what's been said in a lot of the earnings, and I've talked about this, as companies are starting to say the quiet part out loud. I think there was a lot of resistance to talking about the potential impact of tariffs, probably because they didn't want to get in trouble with the president of the United States. But I'll just use Home Depot as an example. Michael, you may remember we talked about this on an episode when they released their quarterly earnings in the spring. They said, we're not going to raise prices, basically talked about how tariffs are not going to be an issue. At the time, I said, I think that is politically motivated and a bunch of BS. They released their quarterly earnings. Well, it turns out they are raising prices. It turns out that they do expect to have an impact from tariffs. So I think we're just starting to see how this is all playing out. There's also this crazy issue about retail accounting versus cost accounting that maybe we'll put a link in the show notes where Ernst & Young tries to explain this. But anyway, we're, I think, just starting to see the real impact, and most of this is going to hit a few months down the road.
Ethan, you're a savvy observer of the retail industry, and on a daily basis, I'm sure you're talking to leaders across the industry and in many sectors. What are you hearing? We've been hearing things like, I'm going to take these tariffs, as Steve said. Most of the merchandise I brought in, I loaded it in, or it's sitting in some kind of intermediary place in the middle of a big warehouse. But Steve used the term feathering in, but that's kind of, listen, I can't take the full load on this product, so I'm going to raise other products a little bit. What are you hearing from how they're thinking about tariffs?
So, I mean, what we're seeing in the data reflects exactly that, which is, I think the word uncertainty really hits here, right? I think it hits in a lot of ways, but here especially. And I think when you look at how the consumer has responded to this, it gives us some really interesting indications. So when we first had that quote unquote Liberation Day earlier in this year in the spring, we saw, Home Depot is a really interesting example. This surge of Home Depot visits right before, and then Home Depot visits started to tail off in the middle of their seasonal peak. But in certain spaces, whether it was dollar, grocery, membership clubs, visits really pop and have sustained stronger than they were pre. And so I think what we end up seeing with consumers, at least, is this period where we kind of know how they're going to react to something that drives economic uncertainty, which is lean on these things that they were leaning on when inflation was a concern, when there was this whole myriad of other post-pandemic economic challenges. So I think we have a really good sense of how the consumer is going to react. From a retail perspective, I think it's so dependent across the board of if you're aiming towards a higher end customer, probably impacting you less. If I was in the home furnishing space, the home improvement space, I'm probably more concerned. I'm probably orienting my strategy more towards the pro category right now. And there's just lots of ripples too that I think are really unclear. And so we have a manufacturing data set that looks at warehouses and visitation to those from and the activity around it. And we just see this kind of little fluctuations where it feels like nobody has a crystal ball and everyone's trying to cover their bases and be prepared.
Yeah.
And Steve, I'd layer onto that. You've mentioned before in our conversations this idea of pricing power. Ethan's talked about the category you're in, but I think it varies by, listen, I can take price and I have pricing power versus those with less pricing power. What do you make of that? How are you still thinking about that?
Well, I think that's true, and I think that there's lots of evidence of that, and we've talked about some of that. I also think that, and we'll, I assume, talk about Walmart in a few minutes, but you've got certain retailers that are in a better position to not raise prices because they're very focused on market share. but I also think they're testing their way through that. And so uncertainty reigns supreme, as Ethan was getting at. I think people are trying different things. They're seeing what the response to demand is. There's obviously still a lot of uncertainty about the economy going forward. Evidence of pull forward. Everybody's like, oh, the consumer is very resilient. Well, one, as you know, I don't like saying the consumer because, to Ethan's point, affluent consumers, the rich are getting richer. They're doing great. Lots of people at the lower end of the economic spectrum are trading down or just having to pull back in general because they can't afford it. But is this resilience really, so-called resilience, is it really surprising? The U.S. at least came into this year with great economic momentum, low unemployment. So to me, it's not that surprising at one level that sales are up 4% or whatever on average, but nobody experiences the average really, right? And there does seem to be evidence of pull forward. So is the first 7-8 months of the year going to be considerably higher than the back part of the year just because of the pull forward, notwithstanding whatever happens with interest rates and tariffs and all that kind of stuff?
And I
don't know.
Right. I want to follow up with Ethan on that point exactly because, this perhaps framing of a false narrative over the summer, as you think about with your clients and your data, what the data tells you about going forward, maybe it's telling you a false story. And are you seeing this kind of, I've heard that back to school season has been very strong in terms of store traffic, but maybe it's back to your point, people are trying to get in there before they perceive that prices are going to go up. How are you thinking about that?
I don't know. Like it's again, like there is. We're going to talk about these larger retailers later. The really big ones are doing great. Like they're seeing really good visitation. But in a lot of categories and a lot of retailers, we're seeing visits down year over year.
Yeah.
So it's not like this incredible visitation. And even those that are
you saying there might be bifurcation, Ethan?
I mean, look, it's. I actually gave you the head nod. I mean, yes, 100%. But I think even more. I do think uncertainty is like the theme right now. And so you're seeing, again, it's not going to be huge drops because you still have some consumers that are in a very good economic position and like the tariffs are not going to make that big of an impact. And so they're continuing on as always. But you have others who are looking to kind of trade down. And I think that we need to look back a few years in order to like contextualize this properly, which is look at the retailers that expanded dramatically in that immediate post-pandemic period, who were really value-oriented, who gained not a ton, but a little bit of visit share. Dollar General, Costco, Walmart. These little gains are now going to pay off even more dividends because when there is that uncertainty, I'm going to lean towards a place that's a little bit more value-oriented than maybe the place that's a little bit more expensive.
Time to take share. It's almost reminiscent of the COVID era where you had kind of brand and switching for external reasons. Steve, talk about this outsized tariffs on countries like India, Switzerland, and Brazil. I mean, these are major players. I think about India and in the garment and fashion and footwear. And these, the India tariff, if it sticks, it just kicked in this last week. 50% or something like that. These are big, unexpected numbers, right?
Yeah, just quickly, because I guess the point about talking about some of the India, Switzerland, Brazil that have these really outsized tariffs, as well as another story that happened last week, is the possibility of some sector tariffs, in particular on things like furniture.
Furniture, yeah.
And if these are to stick, and obviously famously, we've got the taco thing going on here. So who's to say? But if you've got these massive tariffs on some of these companies, which are important to many retailers, India to the apparel business, Switzerland to chocolate and watches, and Brazil coffee, I guess Havaianas, some other little niche players. But anyway, that could be quite dramatic in particular areas. So again, these are just really hitting right now. So I don't expect this next week we're going to see massive price increases, but as we go into early next year, it could be quite significant. So yeah, I think it's just something to watch.
Yeah. I think you got a lot of stuff sitting in bonded warehouses as well, which is a record amount. They sit there in this intermediary world of on tariffs. And for future episodes, I want to keep an eye on Mexico because Mexico's been getting some passes here that they're very interesting that Canada isn't getting. Of course, we're in the USMCA, the three countries together. There's been developments there, but we won't go down that technical road.
There's plenty of rabbit holes that go down here that That, like, frankly, I sort of knew about, and many other things. I'm like, oh yeah, bonded warehouses and milk runs and across the border to transshipping.
Transshipping, and I think there's a lot of fraud going on, by the way, with stuff moving around. Where does it come from? Well, it comes from a low. Anyway, like you said, lots of rabbit holes. We could even get Latin about this and talk about de minimis, which is also very important. But let's move on to talk about some retailers, because it also helps to add some context. And of course, the big news over the summer, actually quite recently, was, and here's a reference to The Who, which no one will get except maybe Steve and a few others, meet the new boss, same as the old boss. So you've got, the existing boss kicked up to chairman or grand poobah, and now you've got the COO who's been there 30 years running it. Steve, you focus a lot on leadership. I guess there's a world in which that kind of experience is valuable, but is that the kind of experience and change that Target needed? Do you think it's going to work out for him?
Well, I hope I won't get fooled again, because for a while we were talking about how every reference going forward will be to a Who song. So just brace yourself, younger listeners. No. Well, I think we talked about it last time we were on the mic, and I wrote a piece for Forbes about this, that Target appeared a few years ago to be a real winner during the post-COVID period. And then things have really gone downhill pretty much since. And I think a big part of that was being an essential player and investing quite a lot in upgrading their fulfillment capabilities. But that seemed to actually switch to a weakness as the store experience really deteriorated. So, they promoted the CEO, Fidelki, to the top job. By the way, there's a little bit of misreporting. Brian Cornell, it made it sound like Brian Cornell quit early or was fired or something like that. Brian Cornell was planning to retire at the end of his contract in February. That's what's happening. The weird part about it is he's sticking around as executive chairman. So I don't know. I don't know this gentleman in particular. He certainly has a lot of great experience. He was overseeing, though, the areas that had the biggest issues. So promoting the guy who was overseeing the areas that Target's really struggled at, or not all of them, but many of them for the last 2 or 3 years, seems a little bit weird. And I do think there's this idea, and certainly Wall Street was hoping for an outside perspective, because they feel, as I do, that Target really needs some pretty significant changes. So, we'll need to see what happens here. But I think, as Ethan can probably speak to, they've had tremendous traffic declines. It would appear that they haven't been converting their traffic very well. And there's just lots of evidence of significant weakness in this business. If you just compare them to Walmart, who we'll talk about in a minute, the difference just from a comp store standpoint for a couple of years now is like 7 or 8 percentage points, which is just massive. Now, Target is similar in many respects to Walmart, different in some important ways. But I don't know. I don't love it. I think what I like less is that Brian Cornell is going to stay around. I don't think that is a good look, given that he was at the helm during this real deterioration in the business.
Ethan, can you help us out? We talk about traffic declines. Placer's got some great data on this, and as you said off the beginning, they are a behemoth. Let's not underestimate the size of Target, and their traffic declines are all relative. But have they had traffic declines, and what order of magnitude? What's your data telling you?
Yeah, so what we're seeing is a 14-week period from late January to early May. We were looking at 5%-ish year-over-year declines on average. Okay. That's actually shrunk over the last few months. Oh. The 16 weeks that followed were, so again, early May through the end of August was down to like 3.5%. But it still declines, right? So let's not try to overcome it. I think the Target question is really interesting. I was asked this recently in an interview about Target. I remain super bullish about Target's potential, because I think Target is the counter or the outlier in the bifurcation of retail narrative. Right. And I think that Target concept that was so important to it was like, it's this higher end version of. That doesn't mean there isn't a value place, but you had the Apple store in stores, the Disney store in stores, the Casper store in stores, like this idea that there's this, they really get the middle, so to speak, of where I'm trying to save on certain things, but I'm willing to spend on others, which is a complicated audience to get. And I think elements like declines in the in-store experience, whether it be, not having products in stock, right? Not having great kind of service at those stores. Those are extra important if you're trying to be Target. Right. And so I weirdly think Target's issue is, and not minimizing how difficult this is, but it's fixing the basics. And I'll give you a real world example. I walked into a Target store. I'm a big Target person. I'm a fan of the brand. I'm a fan of the retailer. I like them as a consumer and as someone who looks at the space. And I walked up to a person who was being super helpful in the store to utilize a changing room, right? My daughter wanted to try something on. And she didn't speak English. And so she had to use an application to translate what we were saying to her. Now, that works. That's amazing that there's people there who can help. But the idea that the person who is going to be engaging with people so often, that's a miss, right? That's something that, does it really hurt the experience? No, but you're talking about 3% traffic declines. You're not talking about 20. So I think it's really fixable. It's just about leaning in on the things that would improve that experience and bring them back to this Target level.
Yeah. Now, I want to ask you both about I think it's a bit of a red herring, if not all red herring, but you talk about unique audiences. Let's talk about the DEI debate. Many retailers rolled back their DEI initiatives in one way, shape, or another, either in name or in form. Target seems to, at least, I'm not sure if they're calling that out as a reason or if people are hanging on it too much. Ethan, what do you think? This whole losing traffic because of their stance in this, do you think that's a material issue and the leadership happened because of this and values matter?
I think values matter. I do. I think values matter over time because brands are built over time. I think if Target was an upstart retailer that was targeting only Gen Z, and then maybe that could have a bigger impact. But no, I don't think so. I think Target's an amazing retailer that's built an amazing brand off being able to do certain things incredibly well. And it's refocusing on those core fundamentals that is going to drive its future. I think those other elements are, they're great headlines. I don't think they're substantial impacts on traffic.
Steve, are you as optimistic about as Ethan is around that notion of building audience and that they have the potential to bounce back?
I do. Well, the general comment I'll make, and if we get a chance to talk about Kohl's or some others, I'll make the same. I mean, the hard thing about turnarounds generally in this world is, as you probably heard me say before, customers generally don't switch in a meaningful way just because you're a slightly better version of their alternative. If you get into this pattern of loving TJX or whatever, so it's one thing to close the gap, but that's not enough to get people to switch. So when you've got a business, in Target's case, that's lost billions and billions of dollars, it's not a trivial issue. But I agree, I think from a positioning standpoint, so I'll talk about just quickly execution and then strategy and then DEI really quickly. They clearly have missed a lot on execution. Ethan's talked about that. So I think that is a very fixable issue. It will take time. It will take investments. It'll take testing. They're already testing some fulfillment changes. So they have a lot to work with. The economic conditions are probably not their friend because of the category mix they're in and more discretionary mix. So that's a more macro issue, but they have a lot to work with. So they've got to focus on execution. They've got to convert traffic. They got to get average basket, all that kind of stuff. And I think that's doable. And with any luck, the economy will move a little bit more in that direction. That will help them. The other issue to me is a strategic marketing position. And I'm not suggesting, I did an interview that people might see for Adweek on this, but I'm not suggesting they literally lean into expect more, pay less as a campaign idea. But the thing that Ethan alluded to is they were the step up from Walmart. And I think part of their issue is they were engaged in a bit of a race to the bottom with Walmart. They're trying to out Walmart. And they have to have some strong values. They have to have those traffic driving items, but they have to have a reason to go to Target over Walmart in a more significant way. And trying to out Walmart, out Amazon is just not going to work for them. So I think they need to get back to that. What are those differentiated brand offerings? Whether that's some of the partnerships that they're doing this thing with Warby Parker. I mean, those are reasons to go to Target instead of Walmart instead of Costco or just buying something on Amazon. So I think that strategic marketing, they need to get back kind of to their roots, whether it's literally Target or, those are kind of campaign ideas. I don't know enough about that to have a strong opinion. DEI, I definitely agree. I think it's a bit of a red herring. They clearly screwed it up. I mean, they alienated the conservatives, they've alienated the progressives. I mean, that could have been managed much better. It's definitely not helping. But yeah, I think their issues are much more fundamental to execution and strategy.
Let's move on and talk about Walmart. For many years, people were asking me, who's the next Amazon? And I kept saying it's probably Walmart is the next Amazon. Actually,
Amazon was the next Walmart, to be fair.
Yeah.
But
well, I know, but that's this thing, right? And everybody's wondering what's next. Well, Walmart came storming back, and their results are just really amazing. I remember talking to a Walmart executive, and he said, "Listen, I just changed the intensity of the lighting in one zone, and I can generate billions of dollars on our traffic." So, just small tweaks at their scale has tremendous outcomes. Now, Ethan, what are you seeing in terms of, is this tweaks in the lighting that's causing these results? Are they getting better traffic? Are they picking up perhaps what Target's laying down?
No, I think one, we talked about this years ago, and I think we might have even talked about it on this podcast, but like the move is going to be up market for those players. Like Walmart's going to, we saw this, and there's so much more competition in that value lane with the dollar players that Walmart was going to move up. And I think that's part of it. I think they've been really smart from an innovation perspective do we remember the Jet.com acquisition? If you rate Jet.com just as the acquisition of Jet, when have we shopped on that website? Never.
Right.
But think about how much smarter Walmart got as a result of that investment.
Yeah.
And I think they're doing something, even when you look at their earnings, you look at the sales growth, and how much of it is coming from store-fulfilled digital sales. So buy online, pick up in store fulfillment. Like that's the future of retail. It's leveraging the massive reach that they have to increasingly do more things. Walmart Connect is another great example. Yeah. So you're seeing a retailer they realize they are the leader, at least from a physical retail perspective. And they're using that starting point to add more and more layers. I think it's brilliant. I don't see how, you might see ups and downs at different points, but the foundation that they're building is for very, very intense strength in the long term.
Steve, in our career, thinking about momentum in retailers, sometimes it's hard to think that A, you can get momentum back, and B, that it'll never end. How are you thinking about Walmart? They're on a run, so to speak. Do you see in the near future this continuing? How are you thinking about the future for them?
I do. I mean, what's both impressive, but of course a challenge going forward is when you're this massive, how do you to grow materially above the average at this scale is pretty unbelievable. So, but it's because of a lot of, I have some inside knowledge because Walmart's been a client of mine, and, they've been the kinds of things they have been working on for 5+ years, really, is quite extraordinary, experimenting. The other thing which I think people don't pay enough attention to is how Walmart thinks of themselves. I mean, this is stealing lessons from Amazon, really, as a platform. So much of their incremental profit, just like with Amazon, is coming from the ads business. They also are growing membership like crazy. They're growing marketplace like crazy. So, I was talking to somebody the other day, and I've made this comment about Amazon before, and really I think it's just become more prominent with Walmart. People are saying, well, don't you think they're going to raise prices to raise market share? And I said, yes, I think they will. And they pretty much have said they will. But keep in mind, if they can grow their traffic disproportionately, and their digital business was up 27% or something like that, that drives the ad business. You can no longer think of Amazon and Walmart and maybe Kroger's margin as gross margin percent, because even though there's not a one-to-one attachment rate, if you are growing that traffic, you have the ability to sell ads that have like an 80% gross margin. So when you're comparing merchandise, it's a little bit like I thought about the credit card business or maintenance agreements at Sears back in the day, right? So people that view Walmart and Amazon as just this retail business, and they're not making as much profit in their retail business, you're forgetting half the value of that company is coming from things that are not product margin. And that's extra impressive. And the disproportionate growth there really sets them up, I think, for the future in a very powerful way, even if their retail sales only grow 3.5% or 4%.
Ethan, quick thought on this. When I ran, as Steve did, we both ran credit card businesses in department stores. And I know in my case, Hudson's Bay, it became the tail wagging the dog. Everything was oriented to grow in the credit card business because that's the only place you made money. Do you worry sometimes, Ethan, that this retail media stuff gets in the way of consumer experience and the business of getting a great customer experience in stores? They're more focused on, let's just sell stuff and we'll monetize around it?
Yes, 1,100% yes. But with the caveat that there are businesses who understand that the core is the core and we need to constantly focus on making sure that remains. And then you can build these secondary offerings and see which ones take. I think Walmart has proven capable of doing that. I think, forget Amazon. What about Costco? One of the greatest things we saw when I was on the online side of the business working at SimilarWeb was that Costco Travel, their website was one of the fastest growing travel sites in the world. But why? There was no marketing for it. It was all traffic from Costco.com to their travel site, which means I love you, Costco. I trust you, Costco. I'm willing to go on this weird foray where you're now a travel agency. And this is why, to kind of tie together with the conversation we were having before, I remain unbelievably bullish about Target because there are audiences. I mean, I think this millennial generation is a big one that's growing into its kind of prime purchasing power, let's say. We connect Target with that higher end of the value segment, right? That Target experience. Their ability, if they can just focus on getting the details right, to then expand into other areas is really powerful. I think Walmart's a great example of a company that is focusing on the foundational elements and then building off from them. Your point, though, is 100% true. If the secondary and tertiary offerings become more important to the business than the core, then you'll see a degradation of the experience.
Let's wrap up this segment with we haven't talked about Amazon yet, and now over the summer, of course, they had their Amazon Prime Days, which is almost like now a week. It's going to be a month soon. So, Steve, they've expanded same day delivery. They've been a bit of a laggard in terms of fresh delivery. I think that's where Walmart's owning them a little bit. They've learned some lessons from Amazon, vice versa. Any thoughts on Amazon over the past couple of weeks, couple of months?
Well, the big thing is that they're greatly expanding the number of markets where they can do same day delivery for grocery. And, clearly to the extent Walmart has a major advantage relative to Amazon, it's all their physical stores. And so to try to neutralize the convenience element, the ability to get same day delivery in many, many more markets, I think is a major move. So we're not that they haven't been very focused on each other as direct competitors. I think this amps up, particularly the grocery battle, to the next level. So we'll see what that portends. But obviously, Walmart is way, way bigger in grocery than Amazon is at the moment. But we all know Amazon's intention to grow there has been evident for quite some time.
I was reading a posting on LinkedIn from our friend Jason Goldberg. He talked about e-commerce growth looking like it was by two people. This traffic and sales bifurcation. Ethan, are you perceiving that, what does he say? Even, on average, Tibet is flat. In other words, there's a tremendous amount of percentage of growth. You see it. You already mentioned it, Ethan, in the store. Listen, a lot of stores are getting growth, but not everybody. Does that resonate with you?
Yeah, I mean, I think Steve's points are 100% true. These are the two leaders of the pack, and because they've built platforms, and I think there are some other examples of maybe a tier just below it that have the potential to enter it, but the breadth of what they can do is really significant, and I think it's a question of lessons learned in terms of how they expand. So we talked about Walmart's Jet.com experience driving this tremendous online capability. I think there's going to be a very similar question that we're going to ask about Amazon in just a few years from now of hey, they bought Whole Foods, they lost Amazon Fresh, they launched Amazon Go. What did they learn from those experiences, and how does that drive their progress in terms of grocery and physical stores?
Yeah, it's an interesting point. I think size helps these in turbulent times. Size helps, right? Remember back during COVID when it was hard to get things across the water from China, Home Depot went out and bought a boat, which is not, it's not something that the independent, smaller, mid-sized retailers can invest in. All right. Well, it's been a great, a lot of these stories are going to continue. I want to move on to our next segment, which we call This Story Went to 11. And I guess we'll put a whole bunch of show notes about what that even means. Goes to 11, not just season 11, but anyway, the volume.
These are things that are remarkable. How's that?
There you go.
Tie it to the name of the podcast.
Now, remarkably good or remarkably bad. So, Steve, I'm going to start with you. We'll do kind of a rapid fire round. What are you thinking about This Story Went to 11?
Well, the one that seemed to capture a crazy amount of attention at one level is the so-called Cracker Barrel rebrand, which, of course, they announced, and now they have gone back. Some people think it was completely a publicity stunt, sort of like what was that International House of Burgers or whatever thing from a few years ago. I guess a couple things. One is, not to be too much of a cranky marketing guy, and I'll defer to Ethan, who's a real marketing guy. A logo change is not a rebrand. It's a logo. And so brands a collective amount of experiences. And so we don't know whether they were going to ever really be able to successfully rebrand. I think it's a great example, though, on the one hand, of just the way the world has evolved, where a bunch of conservative activists can basically shame a company into changing. I think that is crazy. I wish that the amount of energy that we saw on social media could go to things like starvation, creeping authoritarianism or whatever, but I'll get off of it's just do something useful with your life rather than, these people that haven't been to a Cracker Barrel probably in their life get all worked up about it. But what does that say about our society? That's a different podcast. But, to me, what's interesting from a retail perspective, it kind of reminded me a little bit of when Ron Johnson took over JCPenney. And, it's very obvious for many, many, many years, and still continues to be the case, that JCPenney really needs to do a lot of things differently, including get a younger audience, be seen as more contemporary, et cetera, et cetera, et cetera. But you cannot do it too quickly. So whether Cracker Barrel really intended to go through with this rebrand, whether you like the redesign or not, I think it's pretty boring. But the idea that they have to modernize and change in a significant way to stay relevant, I'm sure that is true. But how do you go about doing it? And I think it's very difficult to take a brand that is basically on the way to extinction and not do something dramatic. But you cannot do it all at once, and you have to follow your customers. I do think that conservative activism about it's a kind of a red herring and whatever. But I think the broader brand lesson is, logos aren't brands. You do have to take some leaps if you're really going to change a trajectory. But it's not an easy thing to do when you have loyalists that love a particular thing about it. But those are the customers that are, dying off or going into their slower spending years, shall we say.
Ethan, what's yours? What's your story went to 11 this past?
It was the American Eagle campaign with Sydney Sweeney.
Yeah,
I think it's interesting because the stories kind of align. I have similar takeaways to what Steve is, and I guess I'm unleashing my own internal marketing curmudgeon. But I think what we want from brands is authenticity, right? That's what really sings. So who are you? Are you going to stick to your message? And I think American Eagle is at this really interesting point where, if they do more ads like this moving forward, I think it's going to deepen. This is who we are. We think this is a joke. We think it's funny. If you start pulling back on it now you look like a confused brand that's kind of lost its way. Right. And I think that it's again, a campaign does not a brand make. A logo does not a brand make. The people who are so upset over a shift in a logo, it's the smallest edge. You're listening to the very, very vocal, very small minority. Yeah. And I think figuring out what are the core elements of your retail practice. We talked about this with Walmart. We talked about this with Target. It applies just as much to American Eagle and to Cracker Barrel. If what's going on in your store, in your website is great, you're going to be fine. Right? You'll have some things that miss and some things that won't.
Did you see any movement, positive or negative, relative to their competitive set in terms of store traffic? It's hard to see the data.
Nothing substantial. Nothing that you would look back. Nothing that you would look back and be like, "Oh, that's the ad having a huge positive impact or negative impact." But look at places that did this weird pullback and then tried to Victoria's Secret. There's other brands who are slipping my mind at the moment. Abercrombie is one who did it well, but over a very long period of time.
Yep.
Right. I think there's this idea of you need to ask, and every retailer needs to know, who are we? what is our tone of voice? What are we willing to say and not say? And if you know that, then it's going to be very clear, like, hey, look, this is part of our brand. Like, it is what it is. Take it or leave it.
Yeah, great points. Well, mine is, and Ethan, I know you're a big fan of NFL football. Mine is AI companies paying NFL football salaries to programmers. Like, we hear $250 million bonuses going to young people, young men and women to go work in these AI companies. I just feel this is all going to end in, oh my God, we've got to make this money back, and I'll make it back any way I can. A famous technology companies used to say, don't be evil. I think evil is on the table, and I think there's an opportunity for retailers because it comes down, we haven't talked about AI, but it comes down to trust. And I just read some research from Accenture that said that, some 30-40% of people trust an AI bot like it's a good friend. What is happening? Eventually, that friend's gonna cheat on you. Let me tell you that. I think the opportunity is for retailers to continue to establish trust and loyalty and say, listen, we these other companies, these other platforms, they don't have your back. They're just trying to make that $250 million salary back. So anyway, the money that's going into AI.
What could go wrong?
Anyway.
What could go wrong?
What could go wrong? All right. Well, that's a wrap on that segment. We're going to bring it home now with a peek around the corner. And we just wanted to talk about whether it's signs of turnaround or headwinds or whatever. And Steve, start us off with that. What companies are you looking at? We've been talking about, for example, Gap, Macy's. We've had the authors of a great book on Victoria's Secret. So there's lots of examples of companies I'm sure you're interested in seeing how this is going with the moves they're making.
Yeah, well, we're getting, we got some data from Kohl's, which is famously trying to turn itself around. We're just as we record this, shortly after we're done here, Gap will come out. I think we get Macy's and Victoria's Secret next week. So there's several of these iconic large brands that are in the midst of a turnaround, some of which have shown some signs of life, to date, some not so much. So I think we'll be watching that. With the impact of tariffs, it'd be also interesting to see. Clearly, if you're talking about Macy's, Victoria's Secret, Gap, Kohl's, they're importing a lot of product. And so they are exposed to quite a lot of tariff impact. So it may not be so much how it's reflected in this quarter's earnings, but what are they saying about their ability to maintain consumer demand? Do they have to raise prices? That seems pretty fraught with
pricing power
risk for these brands because they're much more mainstream brands, not Hermes, Prada, those sorts of things. So I think we'll see what they have to say. But like I said earlier, I still think the story is to be written many months down the road, but they will obviously give us some insight as to the economic dynamics they're seeing and what consumer confidence is looking like for their brands.
I think we talked about it at the top with tariffs, the consumer certainty levels and who it impacts. We don't know. And so when we think about the prediction of look ahead, there'll be a lot of Monday morning quarterbacking that we'll get to do. It's really difficult to predict. There's certain places that I feel like whatever the short-term situation is, if things normalize, I feel good about Gap. I feel good about Old Navy. I feel good about Nordstrom's and Bloomingdale's. There's other ones that I think I have more of a challenge with. I know, the mention of Kohl's, the mention of Macy's. I think we need to rethink and, Steve, this is maybe our favorite conversation we get to bump into each other offline is what does the department store look like moving forward? How does it get upgraded? How does it get more interesting? How does it get more exciting in that middle level and not just kind of that top tier luxury experience?
Interesting. I'll add kind of a connected thing to the Saks Global. What I'm keeping an eye on up here in Canada is, of course, Hudson's Bay closed 80, 90 stores. They were part of Saks. They had a few Saks stores. And we're all very interested, literally sitting around the computer with a big bag of popcorn watching this whole Ruby Lou, who's put a bid in on 25 of the stores with a new concept. It's in the courts. It's messy. It's dragging it out. The landlords don't want to give her the space. And she says, you're just, you have no imagination. I'm going to turn it around. So it's just fascinating to watch. Ultimately, I think in these 90 stores, 90, which is big in our country, of course, a third of them will get filled. A third of them will get filled this decade. And then a third of them are just going to get bulldozed down and they'll never be a store again. So It'll be interesting to kind of watch how that develops, particularly in a city like Vancouver, which has lost both a big Nordstrom and a big Hudson's Bay within almost the same block. Steve,
can I just jump in with one other thing, and maybe please. Ethan's got some perspective. I mean, it's kind of related to this, but as I go out and do store visits, and I just went out to a couple of B malls, I believe they would be categorized here in the DFW area, where you see two anchor tenants that have been spaces that have been empty for a long time. One is always the Sears, pretty much. But the way it changed, I mean, it's one thing, and I think, Ethan, this is where maybe you can comment on the difference between the traffic and the really top tier 100 malls versus all others. And it's another example of bifurcation. So you have these, many malls that are doing incredibly well. And then you get these malls that you go into that have one or two empty anchor tenants, so a third or whatever the parking lot is just empty. Then you go inside there, and the Claire's store is going through a store closing, and there's some weird local tenants, 20% space empty, and it's just a very, very different kind of thing. So again, I think this is where we got to be careful when we say, malls are back, physical retail is back, the consumer is resilient. You see really different outcomes. And so again, as a retailer, this stuff on average is not super important. If you're at the high end or the low end, or you're, mostly in B and C malls versus you're in, Bell Harbor and Highland Park Village, it's a very different kind of thing. I don't know, Ethan, if you just have any, Yorkdale in Canada, any quick commentary on that?
Yeah. I mean, and this is my favorite topic, and I'll try to do it as quickly as possible. One,
we might have you back if you're.
The opportunity, there's a difference between saying everyone should do well and everyone has the opportunity to do well, right? Mm-hmm. So when you look at the mall space, top tier malls are doing well, but why are they doing well? They're doing well because they started shifting their focus on tenants away from apparel and beauty and into other types of retail, other types of tenants. It could be fitness, it could be health and wellness, it could be medtail, it could be Tesla stores in the Aventura Mall.
Yeah.
What that means is that there is more opportunity in B-class malls. And we're seeing that. B-class malls are rising. Tenancy is in a great place. Like it's at 90-something% filled occupancy, in B-class malls, according to Green Street. And it's 95%, 96% in the A-class. That's because all of a sudden, the retailer that was in the A-class mall, but is part of that 20% that is of apparel and beauty that's no longer in the A-class, needs to find a home. And they can be the star of the show in a B-class. Yeah. And they can be a draw in that B-class. But it's the creativity to fill the space. And so I think it's very much like there are some great operators who are operating in good environments and they're making awesome decisions. Mm-hmm. And there are some who are making less effective decisions. And as a result, they're not doing well. But the opportunity is absolutely there.
Yeah, I'm going to ask a last question of both of you that I'm not sure either of you can answer with any kind of definite, any kind of. But
strong this closing, consumer, Michael.
Strong closing. Hey, we'll end on a wishy-washy answer. I think about consumer resilience, and the finance folks might call this a dead cat bounce. Hey, it looks great, everything's going well, but it might not continue. Or our consumers they've proved so resilient through COVID in the interim. And I know, Ethan, you're talking about different segments of consumer, but what do you think? Is consumer resilience, is it going to hold? Is it going to stick? What's your best guess?
People are going to buy stuff. It's just where they're going to buy it. So I think the interesting thing is at the fringes. So the audiences that are like, I want to shop at this retailer, but if the economic situation gets tight, I'm going to trade down. It's small but significant changes, right? People move to the suburbs and all of a sudden they're like, oh my God, Costco's nearby, TJ Maxx is nearby. And now I'm converting a percentage of my journey within those spaces to those retailers. That's what's interesting long term. People are going to buy stuff. They're going to spend the amount of dollars. At the fringes is where you're going to see who grabs market share and visit share because of these changes and who misses out on the opportunity to grab market share.
Steve, I shop, therefore I am. Do you believe it?
Well, I think at least for the U.S., for better or worse, we love to shop on average, right? So, if you look at, aside from sort of the COVID distortions, global financial crisis, 9/11, if you look across the long arc of history, retail grows 1% above the rate of inflation generally, on average, right? But my question on this, when people talk about consumer resilience, not to be too curmudgeonly about this easy, is, well, who's the audience for this question? Like most people, other than watching generally CNBC or buying index funds, this is an irrelevant question. As a matter of strategy, it matters entirely who's your customer, who are the customers you're trying to acquire, grow, retain, and get high NPS scores for. So the fact that the consumer is resilient on average is almost entirely a meaningless question if you're Stitch Fix or your Macy's or your Hermes, right? Like the Hermes customer is extremely resilient. The Macy's customer, not so much, right? So I don't know. I don't find, just like I don't find Prime Day's performance very interesting. I don't find, like, none of these things to me as a strategy
Black
guy,
Friday,
advising clients or as a member of the executive team cares about consumer resilience on average. So I largely ignore the question because you're bad at strategy if you keep saying the consumer. You're good at strategy if you say, we have these strategic consumer segments. This is what's going on. This is how we're going to acquire more of them. This is how, like that retail equation, you should be focused on your customer. And if that's not working, you need to improve or shift your aim and find new ways to do it. So I don't know. I'm not trying to be too like glib about it, but I don't know. I just, as a matter of what am I going to do, tell me about my customers.
Well, let's leave it there. This has been such a great episode and a great kickoff for season 11. Thank you, Steve, for joining me.
So the season goes to 11 as well, as it turns out.
That's right. It's one of those things within another thing. It's like one of those dolls. Anyway,
this is almost a Christopher Nolan movie now.
Yeah, which I didn't understand either. Ethan, Ethan, thanks so much for joining us. I mean, you really bring both your insights and your sousson of data, and you put them together so well.
French.
Yeah,
wow.
Well, we're doing a little bit of French. We've got that mise en place.
That's why I'm the first ever
Ooh la la.
co-host.
You are the first ever guest
podcast.
co-host of the Remarkable Retail Podcast, and we thank you for it because we don't always have
ask for a raise right now, frankly. I mean, that would be my advice to you. You do you, but that would be, that's what I would do.
Well, how the sausage gets made, we don't always know how these things are going to flow in any given day, but thank you for your thank you for going with it and lending your great insights and wisdom. So thank you very much. And as I said, that's a wrap on this episode. Please, subscribe if you're a fan. We're available on all major podcasting platforms. Share, stay tuned. You can see this episode now on our enhanced YouTube channel. Many more people are watching or listening to podcasts on YouTube. It's a big trend that we're kind of upping our game for. So for now, let's leave it there.
This is a top to what we use on stage, but it's very, very special because if you can see, the numbers all go to 11. Look, right across the board. 11, 11,
and most of
11,
the amps go up to 10.
Exactly.
Does that mean it's louder? Is it any louder?
Well, it's one louder, isn't it? It's not 10. You see, most blokes are going to be playing at 10. You're on 10 here, all the way up, all the way up, all the way up. You're on 10 on your guitar. Where can you go from there? Where?
I don't know.
Nowhere, exactly. What we do is if we need that extra push over the cliff, you know what we do?
Put it up to 11.
11, exactly. One louder.
Why don't you just make 10 louder and make 10 be the top number and make that a little louder?
These go to 11.
Thanks for tuning in. To help more retail leaders discover the industry's leading podcast, please drop us that 5-star rating and review on Apple, Spotify, YouTube, or wherever you enjoy your pods. And for more on my strategic advisory services, keynote speaking, best-selling books, and even more retail industry insights, go to StephenPDennis.com.
If you are a brand or service provider looking to take your influence to the next level, reach out to us for sponsorship, advertising, or event partnerships. And if you want to learn more about my own keynote speaking and advisory practice, reach out to me via LinkedIn.